Well, the Russian invasion of Ukraine is sparking major volatility on Wall Street. The Dow, the S&P 500, and the Nasdaq all suffered huge losses in early trading Thursday, but stocks did rally before closing on hopes the financial impacts from the conflict will be contained to the region. The Biden administration says new sanctions will cut off Russia from semiconductors and other advanced technology crucial to the military, biotechnology, and aerospace industries as well. Japan, Taiwan, and South Korea have either followed suit or indicated they will soon. However, it's unclear if chip companies in China will also cut ties with Russia. And already rising U.S. gas prices are expected to climb higher amid the Russian aggression in Ukraine. That's according to AAA. The average price is now $3.54 a gallon. That is up from $2.65 a year ago. So for more on all of this, we want to bring in Jay Young. He's the CEO and founder of King Operating Corporation. Thank you so much for joining us. So even before the invasion, though, we were talking about the price of gas. So my question to you is, are gas suppliers already paying more because of the Russian invasion, or are there other factors that are contributing to the price of oil and gas right now?
Yeah, there's a lot of factors that are doing. There's three major reasons why oil prices are going up, why gasoline prices are going to be going up, especially, in the summertime when people start to drive, and that's when the demand goes way up. But the government is still, at this time, coming in and talking about government regulations. They're talking about permits. They're talking about cutting us down, number one. Number two, you're talking about institutions are staying out of the markets, lack of capital. We just don't have the capital that we did at one time to be able to go drill for oil and gas like we need to. And the third reason is because of public companies are still not coming in 100%. They do not want to come in 100% and continue to drill for oil and gas. I mean, Exxon makes $6 billion for oil and gas. Sorry, my thing's going out here. But the Exxon is $6 billion, and all of a sudden instead of coming in and giving the back to the drilling, which is what they normally would do, they instead continue buying up shares. So they're buying up shares instead of going back and drilling for oil and gas is what most companies would do all the time. So that, and also OPEC just said, hey, we're not going to give you more oil. So as they're not giving us more oil, that's going to be a problem.
So then we have all these factors that were already contributing to the price of gas and oil. Now, on top of that, we have Russia, and we don't know what future sanctions are going to be put in place. Could what's happening in Ukraine and whatever potential sanctions there are against Russia also have an impact on the price of oil and gas? And could we see, things go into the stratosphere?
Yes, absolutely. We get about 10 or 11 million barrels. The world needs 100 million barrels of oil a day, and Russia produces 10 to 11. So with that disruption and with Russia taking over Ukraine or trying to take over Ukraine because of all its information and all the resources it has, you're going to see a lot of disruption over there. You're going to see, because, Putin wants higher oil prices, but he doesn't really want them skyrocketing. The last time that the United States started producing so much oil in the United States, he put a lot on the market, discounting it with Saudi Arabia. So he doesn't want incredible. He doesn't want $150, $200 a barrel, which is what a lot of people, think he may want. He doesn't want that, because when that happens, the United States starts to drill for oil and gas again. Everybody gets in the oil business. Everybody's drilling for oil and gas. It makes our supply over here a lot more. He wants us to be dependent on him as much as possible. He's playing that chess game right now. So it's not going to go to $200 a barrel just because of Russia, Ukraine, and because lack of capital. He's going to keep the prices to where he can make money. I think $100 a barrel, $120 a barrel is going to be the top of where he's going to allow it. Because once again, like I say, he wants us to be dependent on him. We buy 700,000 barrels a day from him. He wants to continue that. And so he doesn't want it, too high, but it is going to get up there.
Yeah, that makes a lot of sense. So a little more pain, but there's a cap to it. Jay Young, thank you very much.
Thank you. Have a good day.